Thank you, Mike. Thank you, everybody, for taking the time to listen to our presentation. Cautionary statement, as ever. We're one of the one of the few small to mid-cap companies actually operating successfully in Kazakhstan, outside of the FTSE listed mining companies who are there. We listed in 2010. We raised $60 million on the AIM market to go and build a project in Kazakhstan. Now, since that time, we've produced over 50,000 tons of cathode copper. We brought our project in under budget, on time, and we've been producing cathode copper in Kazakhstan since early 2012. Now, this last year, we announced our sixth dividend, which was 5.5p, which represents, which, I don't know how that's happening. Sorry about that. Which represents $7.5 million of total money returned to shareholders as a dividend. Now, to date, now bear in mind we only started production in 2012, we've paid back to shareholders in dividends $82 million. Now, bear in mind we only raised $60 million in 2010. So the first half of last year we produced over 6,900 tons of copper, cathode copper, and we sold it to international markets through our offtake partner Traxys. The most important element of any operation is how much does it cost to produce the copper. You'll see here our cash cost of production is about 40 cents per pound for the first half of last year. Now that compares currently with the price we see in the market of $2.50 and above. You may be aware the copper price has taken quite a substantial rise over the last few weeks since the election of Trump. In addition, at the end of June, our first half of this 2016 year, we had over $30 million in the bank, and we have no debt on our balance sheet. So there we have it. In just over 6 years of listing, raising $60 million, we built our project, we paid back $82 million to shareholders in dividends. I had $30 million in cash in the bank at the end of June, and in addition, we paid to the state of Kazakhstan in taxes, which are due, over $74 million. I think you'll agree, a success story in anybody's books. We're only a success if we compare ourselves to others. The left-hand chart you'll see shows in blue our graph, share price graph against the copper price. And so whilst the bulk of this graph on the copper price has seen a downward trend, you'll be aware that just recently over the last couple of weeks we've seen an increase to just under $6,000 as it's trading today. But in the meantime, our share price, primarily because we are a very low cost producer and because we pay dividends, we've maintained a very strong stock price. And most recently our price has gone up to £2.20 when it has been trading in the range sort of £1.80 to £1.90. But again, you've got to compare yourself to others. And if you look at this graph here, if you compare us since IPO in 2010 to the AIM Basic Resources Index, you'll see that ours has substantially outperformed others in the sector. And our total shareholder return in the 6 years since we've been listed is 180%, and that's made up of capital growth in the shares and of obviously the dividend payments. As we sit here now, our market capitalization is about just over 240 million pounds, which represents something of the order of $300 million. And this slide just shows how our dividend policy has paid out the money back to shareholders, both through share buyback, special dividends, and then now, since 2012, we've had an annual dividend policy which pays out to shareholders a minimum 20% of the gross revenue, mark you, of our project at Kunrad. So, 20% of revenue would be nice, but in reality, we paid back over 30% of our gross revenue attributed back to us. I didn't realize I was clicking that. Somebody should have told me. You'll see that our total pence per share represents over 50 pence per share paid back. Bear in mind our IPO number was 96p. And this first half of the year we paid back 26% of revenue, but since we started the policy, over 30% has been paid back. And interestingly, we raised 60 at IPO. We surpassed that target in 2015 with our final dividend. We exceeded the money raised at IPO. We're not a conventional mining company. We recover copper from some old waste dumps, waste, not tailings, around an old copper mine in Kazakhstan called Kunrad. Now, Kunrad was one of the largest copper porphyry deposits in the former Soviet Union. Started in the mid-1930s during Soviet times. It's produced over 2 million tons of copper in its life, and it came to the end of its useful life in 2006-07. It was briefly reopened a few years ago, but it's now shut. And that is the open pit that produced all this material. That's 2 kilometers by 1.5 kilometers. But in the mining of the open pit, obviously, you dump a lot of waste on surface. Now, these waste dumps is our product. That is what we leach by a process called in situ dump leach. We irrigate the dumps with a solution of weak solution of acid. It dissolves the copper, takes it into solution, and we then recover that copper from solution. And you can see here, anybody who's got a good eyesight and a copy of the presentation, you'll see some of the timeline. I thought I'd just show you a bit of a video because it helps people see and understand what it is we actually achieve. This is our dumps where we currently recover our copper. This is the position of our SXEW plant. Now, we don't move this material, we just flatten the top. Use a bulldozer to flatten the top. We then put irrigation pipes on top of the dump here, and you'll see these black lines. It's a bit jerky, I'm afraid. And we irrigate the top of the dumps. The solution works its way through, and we pick up the solution on the outside in the trenches. Now you'll see coming up here on the top left a dark covered patch. Now we have to operate in the winter, and as you know, it gets a bit chilly. We cover the area we leach in the winter with this black polyethylene material to stop it from freezing. And here's the trench which picks up the solution, and it flows down to a low point, and we then pump it into our plant. And this is our plant, which we built for $39 million. Very simple, engineering by a Chinese engineering design company, and this was generally built by ourselves. So again, we saved a lot of money by constructing this entirely by our own personnel. Now this plant now, through several expansions, can produce up to, say, 14,000 tons of copper. And this year, that's what we're targeting, between 13.5 and 14,000 tons of copper. This is the solvent extraction section. Pipe work, valves. We have a railway line here, connect to the main railway system, which picks up our copper, and we can export it straight to market. And currently, most of our copper is sold directly into a copper wire manufacturer in Turkey. So this most recent year, the first half of the year, we've recorded some record production, and you'll see that, I always do that, sorry. You'll see that production on quarterly basis has been increasing as we go through the years. These improvements here are down to expansions to the plant, which allow us to produce more, but you can see that in 2016 we've been hitting best years or best quarterly productions we could. Now, it is cyclical. Obviously during winter months it's very cold, it's not as easy to leach during that period. We do have boilers which keep the solution temperatures up to stop them freezing, but you'll still see that in Q4 and Q1 of any period are our lowest production periods, and then we make hay, as it were, whilst the sun shines. This is currently where we recover our copper, the eastern dumps as we call it. You'll see that we've split all of these areas up into cells, and we irrigate these cells as necessary. We have new cells coming on production which give a better copper solution grade out than the more mature cells. And a cell may leach for 150, 200 days, but because you see the number of cells that we've got, we have the ability to mix and match. If I was to say that we currently, at average, leach about 30 to 35 hectares in area. Now that's equivalent to over 82, 83 acres we irrigate at any one time to give us our copper production. But you can see from the drone photographs that we have an exceptionally large area to go for. Not least of which is the western area. Now currently we get our production from the east here. Our next target area is the west, where there's over 440,000 tons of contained copper. We would expect to recover around about 175,000 tons of that copper. Now, the last 18 months we've been putting in the infrastructure to enable us to recover copper from that western side. We put pipelines in, large pumps to pump solution from one side of the dump area to our plant situated over here. We've got ponds, collection ponds, pumps and boiler houses over on this western side to ensure that solution doesn't freeze during winter period. Now the cost that I mentioned at the outset, this pie chart here shows the cost breakdown. Now the benchmark by which copper companies, production companies compare themselves is called the C1 cash cost. Our C1 cash cost for the first half of last year, or this year, sorry, was 40 cents. But our all-in cost is 97 cents, $1. Now there's a lot of companies out there who at a C1 level will be quite happy with $1.60 or $1.70 per pound of copper. And you can see that ours at 40 cents is probably class leading. And the graph on the right hand side, the cash cost curve, shows us situated very much down on the bottom left hand side, exactly where you want to be if you're going to stay competitive in a volatile copper market. I mustn't take all the credit for those low cash costs. Kazakhstan did experience quite a large devaluation last year against the US dollar of about 86%, but you can only deal with what faces you. This is just a table that shows our overall performance since we started in production in 2012. But the interesting points you'll see, now this is only up to the end of June, but we've produced over 50,000 tons of copper now. But you can see the value of the copper we received in 2012 was $8,000 per ton. And you may be aware that this year has been a very challenging year for the copper market, albeit the last 2 weeks have seen quite a marked improvement on these numbers. And in fact, the copper is currently sitting, I think, at about $5,800, $900, which is obviously to be welcomed by everybody. But the project revenue, 300 million. Our EBITDA numbers, look at these numbers, average is 59% EBITDA on that revenue, which has allowed us to pay the dividend of $82 million to date, $74 million, and actually that greater than that number now, given we're a couple of months into the second half of the year. And obviously the average cash cost is 58 cents. I mean, that's brought down quite a bit by the most recent first half results. We take up our responsibility very seriously in the community. We have a very big focus on health and safety, and we have a very low LTI rates. Currently, we're well over 1 million hours worked with no LTIs. Environmentally, we comply with all the obligations put upon us by the local regulations and internationally, I might add. And actually, Mike's company, SRK, advises us on a lot of the geohydrology that we experience on the east and the western sides of our dumps. Socially, we're very much aware of our obligation to the local community and the people who work with us and for us. Since we started, we've put over $1 million into local communities in projects, not in cash, but obviously in kind. we purchase materials and what have you. And our workforce is entirely locally based. I have one expatriate on site who is the CSR and Health and Safety Director. All other production and management people are locals. Just last week at the IGC, the Intergovernmental Commission between the British government and the Kazakh government, we announced we've just signed up a new deal with an exploration company to acquire 80% of an exploration project called Shuak, which is in the north of the country, not far from Stepnogorsk, and we are committed to spending about $2 million in exploration. And there is, I can't really give you any resource numbers except to say that the historic pre-GKZ numbers are over 300,000 tons of contained copper in the ground during Soviet times. We've got to now drill out, explore, trench to see if that's true. Our real target initially would be a copper oxides of the saprolites, and so we can replicate a bit of what we do at Kunrad, but let's see over the coming years how that pans out. And then our other project is Copper Bay in Chile. We're in the process of finalizing feasibility study currently. This is a tailings project, not waste, but tailings from old mines, and that feasibility study will be reporting soon. We're very active in business development. My business development director is here with me today, Gavin Farrar. If anybody was looking to talk to us about any opportunities or things we may be interested in, I would say that we have a big focus on the Central Asia, but obviously we also look elsewhere, because if you're going to look at other copper projects, you have to go where they are. Africa and South America are two countries or two areas where you have to take focus. So what's our outlook? From Kunrad, look, we've got a very profitable business. We've got very low cash costs. We have cash in the bank. We have no debt. And we will maintain our dividend policy. Whatever we might do in terms of any business development, we would always look to maintain the cash flow from Kunrad as funding a very aggressive dividend policy, which has seen us outperform, I think, most of the others of our peers. And I would just leave you with the fact that this year we'll be looking to produce closer to the 14,000 ton guidance. At the bottom there you can see my guidance, 13 to 14,000 tons. We would look to produce very much at the upper end there, and obviously that will dictate then what my final dividend will be, which will be paid June of next year. And with that, thank you very much indeed.